right. Good luck.
I just lost mine.
Okay, I'll put you back in just a sec here. Let's see. Get this going.
Okay, I'll share my screen.
Hold on. Sorry.
Can you see my screen?
I can.
Oh, good. I'll be back in a second. Just let me get something.
Okay, cool. Let me start webinar. We'll be getting started in just a few minutes. Can you hear me? Raise your hand if you can hear me. Okay, good. Yeah, we're just waiting on 2 o'clock and we'll get started. No, actually, this is a webinar feature, so we wouldn't even be able to see you. You're just going to be participating with chat and Q&A if you want to ask questions, but our presenter is going to come on really soon here, and that's about it. So yeah, you don't have to have your cameras on. You won't even have the ability to show your cameras, actually. You can see me here. I'm in the library right now.
Rachel, I'm unable to start my video, my camera.
Let's see here. Where are you? Okay. That should help. See if that works for you.
Yeah, thank you much.
Okay, good. Yay, so let me intro. So I'm Rachel. I'm here at the Central Park Library in the Santa Clara City Library System, and we're so excited that you have come back. I don't know, raise your hand if you did come to any of our other Money Matters series for teens. This is the third in our series and the last one today, actually. But if you did miss them, I did share in the chat link to our YouTube channel that has the first 2 Money Matters programs. So it was Understanding Credit and then the Money Basics. So go ahead and watch those. If you did miss those will be on our YouTube channel. And I wanted to introduce our host today, Duran. He's been doing all of these programs and we're so excited to have you back. Thanks for coming. He's from Key Point Credit Union. And here in Santa Clara, we do have a Key Point Credit Union in the north side by our north side branch library, and Key Point has been so great. They always support our summer reading program and donate money for that, and also just come and do wonderful programs with us. So we're so happy to be working with you guys, and we're so excited to have this presentation today. So thank you all for coming.
Well, thank you for having us, and I'm very happy to do the third part of the 3-part series about the money management and understanding money and so forth. Just quick correction. Our headquarters is in Santa Clara of Bowers Avenue, not too far from the Central Library. This is where our office are. And but we're very happy to work with the library for many years, and I'm very happy to bring this series to the library. And thank you for all those that participate the last couple of weeks and participating today. My name is Doron Neumann, and I'm Vice President of Sales Development, Community Relation, and I work for Keep on Credit Union for the last 17 years, and I really enjoy what I do. A part of great but the most enjoyable part of what I do is really doing a lot of financial literacy and financially outreach and helping people with their how to really develop a successful path to uh, being successful, financially successful. So we had to the presentation. I will ask you to put some comments in the chat. I'm going to have some questions. Also, as Rachel mentioned, not we will have a $25 drawing for uh, a gift card, Amazon gift card. One person will win $25 Amazon gift card. So let me make sure that. So those are the those are the three sessions that we had, two sessions we had so far, really understanding money, what are financial institutions, about different accounts and so forth, different terminology. The second session last week was about understanding credit. Why do we want to have credit? What is credit score? And how do credit score calculated and so forth. And I just want to make sure that everyone can see my screen. If you don't mind, just put in the chat. Make sure if you don't see it, please let us know that you don't see my screen or can't hear me. But if you do, just put yes. It'd be great. So I know that you hear me. You can hear me. And today we're going to talk about making good money decisions. So we take everything together. I'm going to do a short review of what we did the last 2 weeks, and then we'll put everything together and talking about some of the tools and that we can use in order to make sure that we'll learn how to manage our money, set goals, and make a good decision to build strong foundation for your for future financial health. So a lot of when we talk about money, there are a lot of questions out there, so don't hesitate. If you have any questions, please put them in the chat or Q&A, and Rachel can, and I'm going to stop some point of the presentation, and I can try to answer as many questions as I can. So I want to make sure that you do ask the question, and you participate in this session. So I'm going to do a little bit of review the people that were not there. We talk about what financial institutions are. Financial institutions are organizations that are able to a license to help manage help people to manage money. So on financial institution, we have uh, credit unions, retail banks, commercial banks, investment banks, private banks, and online banks. Credit union, I work for a credit union. There are a lot of other credit union. Keep on credit unions where I work. Retail banks, Wells Fargo, Chase, Bank of America. Commercial banks are usually banks that only deal with businesses directly, like Comerica is a commercial bank, Heritage Bank, investment bank, the bank that only do investment, and they help you. They have a brokerage and they do investment only. Private banks are usually an institution that help people with uh, high net worth in a couple of $1 million, and they help them to meet their needs, what they need on a private banking. And online banks usually are financial institutions that only have presence on bank. They don't have actual branches. It's all online. But those are institutions that are insured. Most of them, the credit unions and banks are insured, and commercial banks are insured by the FDA and CUA. They're regulated by government entities. Investment banks are different insurance, and then private bank again under the guidance of the government and so forth. They're all insured. And the central bank is the main bank, the Federal Reserve, the central bank, the bank that regulate and make sure that everything in the economy runs well, and they are the banks of banks. So we have different accounts within financial institution. We talk about checking account, savings account, money market, certificate, and those are deposit accounts. Actually, you take money, you put money in, you put money out. Checking account is the account that help you to manage your money on a daily basis, your bills, pay, shopping and so forth. And so it's really about money management. Savings account is an account that you deposit money into it and help you to grow your money and make sure that you, if you have money, you need money for the long term for an emergency or something big that you like to save for. And if you go to college or you, later you buy a home, this is the account that you put your money as you get interest and you pay interest on those accounts. Money market is another form of savings account when you get a little bit pay higher interest, but the minimum amount of money that you have to put on it is higher than the regular savings account. And a certificate, it's actually where you put you paid get more interest on it, but you put money, you deposit money for a certain time, and you're committed to put this money for 3 months, 6 months, or a year. You cannot withdraw it. If you draw it, you withdraw this money, you will have some penalty. But you do earn a little bit more interest. So those are deposit accounts. We talk about checking account, what is to pay bills and so forth, to manage your money. Savings account is account that help you to place that you could grow your money and keep it for emergency. And I'm going a little bit faster because this is something that we did cover in the last 2 weeks. It's just a very quick overview because it will lead me to the next, how to manage your money and so forth. What is a loan? So a loan is an extension of credit. So when you need to have some money, let's say you would like to buy a car and a car costs $20,000, you don't have $20,000, you need someone to lend you this money. So financial institution will lend you this money, is extend you credit. It's called loan, is extending you credit, and it's called a loan. It's a give you amount of money, you pay interest. The interest, really interest is a fee, and when you pay back for someone to use the money. So if I lend you money from credit union, you will pay interest. It's the fee that you pay us back for the right to use the money. And then if you take a loan, you will have to pay the loan back. There are different type of loan. There's secure loan, that's secured by a collateral, like home loan. And we talk about mortgage. Mortgage is if you hear about the word mortgage, is a home loan. It's secured by a home. Car loan is secured by a car. Motorcycle loan is secured by motorcycle, and there's RV secured by RV, and then the stock secure loan. If you have stocks, you can secure the stock against a loan. You can borrow against the stock certain amount of money, so you can actually, it's secured by something. And certificate of deposit secure loan. If you have certificate of deposit, again, it's committed for a certain time of money. You can borrow money against it without opening the certificate of deposit, without cashing it. Unsecured loan is something that it's a loan that there's no any other security against it. It's you the guarantee for the loan. So there's a student loan, you guarantee that you will, once you graduate, if you took a student loan, you will pay this loan back to the financial institution. Personal loan, if you need money, you can come apply a personal loan and we'll give you a certain amount of money and you guarantee that you will pay it back. Personal line of credit is, again, it's very similar to a loan, but it's a line, meaning that it's revolving. As more you pay into the line, you can withdraw money from this line of credit. And all those are type of loan. Credit card is a type of loan because you buy things without the money that you have. The bank or the credit union will pay it, and then you will have to pay it back. What is credit report? A credit report is a report, your financial report card with information determining your ability to repay, borrow money. Meaning that when you come to the credit union or the bank and ask for money, we don't know about you. We don't know anything about you. So we need to have some reference to make sure that we check who you are and make sure that we know that when we give you this money, you're able to pay it. So there's what's called a credit report. Again, it's used to check your ability to pay back when you borrow money and determine your financial worth, trustworthiness. So your credit report include all the information, all your financial information, all the loans that you take, all the identification information. This is the way banks and credit unions can lend you money. So this is the information that we get about you, and this is the base to make a decision upon how much money we'll give you, and if really we think you're going to pay back. It's, look at your history and know, are you going to pay back or not? And if you pay well, we record it, we send it to the credit bureau. Every time you pay back a loan, every month we send a report say you pay the loan. If you don't pay it, we send a report as well saying that you do not pay the loan. So, and this report sometimes called credit file or credit history. There are a number of companies that collect this information and sell it back, and work with the banks and credit unions, send it back to the credit union or the bank. We have Experian, TransSouth, and I'm sorry, Experian, TransUnion. Those are some of the companies that um, are credit histories and Equifax. And those are information about them. If you missed this session, you can go to YouTube, see the session about credit. But also, if you go to these companies, there are a lot of information about credit and how to build credit. This is the credit score. Again, the credit score is depend on the model, depend on the company, but it ranges between 850, 900. It's very good credit, to going down to under 520. It's the worst credit. So the better credit you have, the better your ability that you qualify for the best interest rate. But people will want to lend you money because they know this is a record. You return money back to the financial institution where you borrow your money. So the higher the credit. So you always want to make sure that you always work your way to build good credit, excellent credit. So when you need to borrow money, you wouldn't have any problem borrowing it and you pay less interest on it. So why good credit matters? Because it has to do with housing. You can't buy a house without having good credit unless you pay cash, and it's not a problem. But if you have to take a loan, you have to have good credit. You rent a place, you have to have credit. Transportation, you want to buy a home, you want to buy a car, you cannot take a car loan if you don't have good credit. Employment, some employers, especially if you deal with money, will run a credit check on you to make sure that you don't have any credit challenges or credit issues. Some government jobs and military and financial institution definitely will run your credit. Utility services, to hook your water, electricity, you may need to have a credit check to make sure that you can pay those utilities. Insurance, definitely tied to your credit. And again, if you don't have great insurance, great credit, usually insurance is much higher. And entrepreneurship, when you want to open a business, you lend you upon your credit. So you need to make sure that you have good credit so you actually enjoy all the benefits of good credit. You're able to help get housing, transportation, employment, utility service, insurance, and entrepreneurship. So those are different why it's important to have good credit. Um, so now about how do I build good credit? And so understand what credit is. Really, I want to encourage you to read more about credit. Um, do not sign anything unless you understand what you're signing for. Be responsible. Make sure that you pay back on time. Always you make sure that you pay your loans on time. Charge only what you can afford. Don't buy anything you cannot afford. If you cannot afford it, do not buy it because you always have to pay it back if you take a loan against it. Pay all your loans and credit card bills on time. If you take a loan, you always pay it on time. The great rule is you want to set up a direct pay from your checking account to the loan, so you don't have to deal with sending a check every week, every month to the loan. It goes automatically, and then of course, you have to have money in your checking account, but you know that this loan is paid from your checking account, and you don't have to. Even if you forget, it's still gonna go through, so you never miss your payment. Avoid going over your credit limit if you have credit account. Do not overcharge. Uh, know which account you have on your credit report. You can you can have your credit report on a yearly basis, one time for free. You don't have to buy the credit report. You can contact the credit bureaus, the credit companies, and they will supply you with one credit report free per year. Make sure you know exactly what you have on your credit and check what the information show. Make sure that your name is spelled correctly, your social security is correctly, you don't have accounts there that are not belong to you. And if you do, you can always contact the credit bureau. There's a way how to dispute things that are not correct on the credit. So this is a little bit why and how to build good credit and why it's important, and then create a budget. And we're going to go into the budget. Uh, so I went all this very quickly. I just wanted to make sure. I don't know if there's any questions so far about what I went. I did go quickly over it because this is stuff that we cover in the last 2 weeks. Any questions so far, Rachel? You see any question?
No, I think we're good right
You're good.
now. Let
Okay.
me go.
Okay. So, so I want to go from here and talk about what is a goal. A goal is an idea of the future or desired results that a person or group of people envision, plan, and commit to achieve. So let's say that I'm a piano player and I want to make sure that I play a certain piece very well. This is my goal. My goal is to play it very well. If I want to have taken a class and I want to score, have A is a great grade, I will aim, have a goal to reach this. If I want to have $1 million when I'm 20 or 30 or whatever, this is a goal, something that I set to achieve. I just want to mention also that when I do these sessions, I did them many times, and I do have two son teenagers. One is a freshman in college, the other one is a junior in high school. So a lot of the things that I do, I did work with my kids as well, and I work with many young adult before teenagers. An adult, and so those are the things that we cover, and part of it, people say, well, sometimes, why do you talk about goals? Because goals are very important. You will see when we go into it why I talk about goals and why they're so important. So what is a SMART goal? Can someone just put just the acronym, what is a SMART goal, in the Q&A? What is a SMART goal?
Specific, measurable, attainable, realistic, timely.
Yes, very good. So definitely, it's specific. We want to make sure it's a well defined and clear. We know exactly what we're looking for. It cannot be vague. It has to be very specific, and I'm going to go into it in a minute. Measurable. You want to make sure that you're able to measure progress. Again, it's not vague, but you want to make sure to accomplish the goal you wanna specific. So let's say specific. Specific. I would like to have A in this class. Measurable. How do I measure it? So I say I do all my homework. Do I complete all my homework on time? Did I submit all the assignment on time? And did I have A and above is grade on all my tests and quizzes? I can measure my progress too, right? Every time I can look at my grade and say, oh, well, now I have maybe 89. So I need my next test to score 100 to make sure that I move my grade into A. So it's really measurable. I'm able to measure it. Achievable, attainable, and not impossible to achieve. Now, I can say, that's my goal. Um, I want to reach today, run 4.5 minutes a mile, in which doesn't happen. But let's say this is my goal. Well, it's a great goal, but is it attainable? It's really something that I can do? Probably not. Many years ago, maybe I could get into it, but close, but not today. So I need to make something that it's achievable, it's attainable, and I know it's possible for me to achieve. Realistic, again, within realistic, is it realistic? It is something that I can make it, but it's a realistic target. It's a practical and sensible. It's not something that it's, I mean, I'm not saying that it's not great to dream. I mean, definitely we want to be dream about things, and maybe times dream turning goals, goals turn into dream, the dream turns into goal, and we want to reach what you want to reach to the sky. But when we do things, I think it's about being steps, about making sure that we reach certain goals. If I say today I want to, tomorrow have $100 million, it's great, but how do I reach it? What is my goal? Is it attainable? Probably not. I mean, I have to be practical. If I want to do it, maybe a few years, how do I reach this goal? What are the steps that I need to take? So I need to be realistic. And I think sometimes when we set unrealistic expectations, we're more disappointed because we think, oh, we didn't reach this goal. However, if we reach something, maybe it's realistic. We say, oh, we reached these small steps that we're doing toward the big goal. And timely, we need to make sure to define the timeline. Is it the same thing when you go to school? You have a semester, you have a quarter, you have a time, so you have to meet this timeline. So if you reach certain time, you need to make sure that I have a target date. Usually when you have a target date, it's easier to make things achievable, realistic, and measurable during certain time. If not, it's drawn, and you never know, where can I reach this goal and how can I meet it. So SMART goal. So just keen. If you don't mind, just put in the Q&A. I will have, I will save $99. It is smart goal or not? What do you think? See someone raise hand. Is it, you can key it in, is it the smart goal or yes or no?
They said not smart.
No, right. It's not smart goal. It's very
No.
vague. I will save $99. Not a smart goal. What about in the next 3 months? I will save $99 by putting $33 in my savings account every month. I will save this money by working an extra shift every week for the next 3 months and bring food with me to work instead of ordering out. Now, this is a smart goal, right? The reason it's smart goal, in the next 3 months, I know exactly the timeline, right? I will save $99. I know how much I want to save by putting $33 in my saving account every month. So now I break it down to month. Every month, I know that I want to put $33 into my savings account. I will save this money by working extra shift every week. So I know that if I work extra shift every week, I will have after taxes about maybe $34, $35 extra, something money that I can put in. And I know that if I bring, if I go every time I go out to eat when I go to work, and if I bring food from home, I'm able to save this money and I'll be able to put 30 extra $33 in my saving account. So this is measurable, it's realistic, and it's again it's attainable and it's time bound, and so it's a smart goal. It's very specific, and I'm sure that you do a lot of smart goals when I know in schools they teach you about smart goals. So it's very, very important. I think a lot of the things that I do, I put smart goal to myself and then to make sure that I meet those goals. And again, sometimes we're not going to meet them. What happened if 1 month you only have $20? What would you do? Then in $20, then I would think, okay, the first month I had $20. What do I need now? I know $20, but my goal was 33. What do I need to do the next month to get this $33? Maybe, maybe during the week, I went one time to eat instead of bringing food from home. This is why I have $20 because I had to pay $13 to buy a sandwich and a drink. So I can always adjust it. It's a moving target. I can always adjust it to make sure that I meet the main goal of reaching $99 into my savings account by the end of 3 months. So this is a smart goal. So from here, I'm going to go into budget. What is budget? Can anyone just put in uh, one word what is or two words what is budget in Q&A? Can someone write? Can you write what is a budget in 2 words?
A limit, maximum,
Okay. What else?
certain amount, saving up,
Great. So everything is correct. When we talk, go ahead.
capacity, and use wisely.
Okay. So great. So all these things are within the budget, but budget is really, when you hear the word budget, it's a financial plan. Budget is a plan. It's another way of saying a financial plan is a budget. A budget is an estimate of a person's expected income and expenses over a future period of time. Or more pure, simple way to put it is I take all the money that's coming in and I take all the money that goes out and I write a plan. I put it together and I show you how to do it. It's a very simple plan. So a lot of people, when you talk about budget, people get confused and get under pressure. It's very simple. It's all about how much money coming in, how much money goes out, and what's the difference. And then you can put a plan together and you can adjust it. We talk about smart goals. It's all a moving target. It's always can be adjusted. So you can do it on a spreadsheet, and I'll show you an example in a second. How to create a budget. So your total earning, calculate how much money you make per month, include any money that you receive from investment, or maybe you sell on eBay, or any other chores that you do and you receive money, or any jobs that you have. Earning is really how much money you bring, how much money you earn. So sometimes you hear about income, how much income, earning, what is your pay. This is all things that come to you. Any money that come to you, it's your earnings. And you take all these things together and put them under earnings. Assess your monthly expenses. Expenses and everything that goes out. So expense can be utility bill, it can be going to a movie, it's expense, you pay it out. If you have any hobby, you eating out, entertainment, paying for car, insurance, buying books, anything like this that money goes out from your account is expense. You expense it out. So you have income, earning what you come in, income, expenses, what goes out. So this is a very simple budget. So again, just for sake of the numbers, I look at this and I want to put. So you see, on one side we have, in this side here, we have all the income on all the credit, everything that's coming in. Net income. Net income is all the money to receive after taxes. So let's say that you make, let's say this person makes 4,200 a month. Only thing that will come to is that you will receive maybe is going to be 3,500 because it's going to be probably maybe pay for insurance, benefits, taxes, state and federal tax, all these things that you pay out. At the end, you get net income. What net income? If you have investment, you will get dividends. If you, let's say you work and you get a bonus, it will be a bonus that go there, and the bonus is taxable. Maybe you sold something on eBay and you earn some money. Everything going to be in this column here, and it's very easy to make. You can make it a spreadsheet, have one column say income or credits. Expenses and debit. So expenses and everything goes out. So let's say rent today is 1,800, car payment 350, car insurance it's 200, utilities and cell phone is 250, food is 600, clothing is 100, savings is 300, and entertainment, movies and so forth are 200. So can someone calculate and put it in Q&A? What's going to be my total expense for that month? Anyone? What is the total expense?
3,800 question mark.
And see here. Yes, correct. So it's going to be 3,800. So what do you think? What happened now? What do you see? So my income is 3,500. This is what I bring in. My expenses are 3,800. So really what happened? What is the difference of total income less total expense? So what we see is that right now I'm negative 300, right? My income is 3,500. My expenses are 3,800. So now I minus 300. Can I pay anything with minus 300? No. So in the Q&A, what do you think what do you think should I do? What are your suggestion? Anyone, what is your suggestion? You can put it in. What should I do?
Get a job.
Okay, get a job.
Spend less money.
I spend less money. Okay.
Take a loan out.
Okay.
Work more hours.
Okay. Okay. So let's go over and see what we should do. Okay. So I would say if you get another job, it's great. First thing I will do is look at my expenses. Okay. And see what should I do. I will not take a loan. A loan is a last resort. And I tell you this, I mean, you need to start, a loan is a last resort. You need to see what comes before a loan. Do not take a loan to meet the needs of your expenses. So let's say I make my net income is 3,500. So what I decided is actually decrease some rents. I can decrease. It's probably fixed rent, or I can go to my landlord to say, you know, if my rent is renewed, maybe you not increase it, or maybe you know, you do it less. But usually rent stay the same. Car payment is a loan; it will stay the same. It will not change. Car insurance, you can shop maybe better car insurance. and see if maybe there's cheaper car insurance. Utilities and cell phone, maybe you can need to save a little bit on utility. Maybe, don't use the light so much. Food. Food was a big expense, right? What we had food before. Let me see here. We had $600 on food, right? So food right now I cut it to 400. So I don't have to buy, you know, I have to make sure that I go to the store and I buy exactly what I need. I need to make sure that I look what I have. I look what I need. Do I anything left last month that I bought and I didn't use? Do I really need it? You can decrease your food to the reasonable amount. I don't want to say that you want to starve yourself, but again, maybe you go out to eat twice a month, and maybe you say, well, I can go eat out this month, and my expenses going to stay low. Clothing. Do I really need to buy those clothing? If you see, in the first time I spent $100 on clothing, do I really need this new pair of pants, or do I need to shirt? Do I really need it? No, I don't probably need it. And savings. You always want to put money into savings. So part of your monthly budget is always saving as expense. And the reason it will do it because you will have to have the habit of putting money to savings. You always want to put savings. If you don't have enough money, you maybe want to decrease it, but you always want to put money aside for savings. I will say it's a good rule of thumb, between 10 to 15% of your income should go into savings. Always. I mean, your age, I will say probably more. If you when you work later and you have expenses, about 10 to 15%. If you can save more, wonderful. Right now, I tell my kids, when you make money, probably 85 to 90% of your money should go into saving, investment, but has to go into saving. And entertainment. Do I need to go see all these movies? Do I need to go out? Maybe not. Maybe last time I spent, what did I spend last time? I spent $200 on entertainment. I'm not going to spend it this month. So what will happen is suddenly when I make these cuts, and again, you remember it's a moving target. I need to always adjust it. Suddenly my expenses are 3,250. So I make 3,500. I managed to reduce my expenses to 3250. And again, I did not touch my saving rate. I cut on clothing, I cut on entertainment, on food. So what I have left now with? Can someone tell me what I have left now with? What the difference is? Just put it in chat or Q&A. What is the difference?
250.
250, right. And what should I do with the 250?
Save it.
Right, excellent. So what should I do with the extra money? Save, always save. So this month, when I have extra $250 and I save $300, now I'm able to put $250 in my savings account. So part of budget, always you want to make sure that you have a goal for saving. What is my saving goal? I want to reach, by the end of the year, I would like to have $3,000 saved. And a budget is a tool that help you to reach this goal because you know how much money comes in, what your expenses, and how much money you want to put into savings. And sometimes you have to do sacrifice. Yeah, I mean, this is part of budget. I'm not saying you have to torture yourself not to eat, not to go to see movies, but you have to do things reasonable to make sure that if you have a goal to meet, to do 300,000 at 300 $3,000 a month in your a year in your savings account, you make sure that anything that you extra will go to savings. Because what happened, it's life, and sometimes there are emergencies, there are unexpected expenses. What happened if you have your car breaks down? You have to pay it. I mean, it's very expensive. You have to replace brakes. You have to replace just even a tire. You have to do a service. Those are expenses. Where you're going to take them for? So you don't want to have, again, you don't want to take a loan to cover your expenses. You want to make sure that you have money in your savings account. And then when you have money in your savings account, any unexpected emergency, you can cover it. Sometimes you say, well, I don't have any, I can do it. I can do it this month. If you have a credit card, you want to pay it, what you want to pay it back, you want to pay off your credit card when you get the money, just to make sure that you don't hold balance in your credit card. So this is a budget. This is how you create a budget. The one side you have income and credit, the other side you have the expenses, or it's called debit, what's going out, and you manage it. You really, so today maybe you just make, you know maybe you just make $300 a month or $200 a month. uh, I will encourage you to do a budget, because even if you make $100 a month or $50 a month, still do a budget. Even if your budget will have net income $50 here, expenses only have savings $50 or $40, you want to make sure that you do your, or maybe you say your expense today is, going out to eat $20. Savings you put $30. You want to get to the habit of creating a budget and a habit of savings, but always create a budget. When you start doing it now, and it doesn't have to be very complicated spreadsheet. I'm sure a lot of you know how to use spreadsheet. Create a very simple spreadsheet called my monthly budget, and start practicing it. Because what happens if you don't practice it today, when you get older, you will not do it. I see a lot of adults that don't have budget because they think first of all it's complicated. They don't understand what it is. It's very simple, but they never start doing budget before. And when you get to this habit, you'll learn how to use this tool. And this is a very important tool that will help you through the rest of your life to manage your money, regardless if you have $1, you have $1 million. I can tell you this from my experience: people that do not know how to manage $10 do not know how to manage $1 million. So it's very important. We see in our business people that make over $1 million a year, and then they spend $2 million. So they broke, they have nothing. So you have to make sure you have a budget, you have a goal, and you be very reasonable goal, reasonable goal, and you can put as much money as you can into your savings. Any questions so far? Okay. So again, we talk this extra money, save it. So talk about needs versus wants. A lot of you probably see needs versus wants when you're very young, and I think it's a very important concept when you look at budget. You look at items that you need to buy. Is it a need or I want it? And one thing that I brought up last month or last week is the fact that when you see something that on sale, let's say, and it's, let's say, $400, and it's very expensive, you hardly have the $400, and you say, well, I'm going to buy it because it's, I really need it. What I do, I have what's called a cooling period of about 3 days, and I think do I really need to buy it? Most of the time, I can tell you that most of the items that I really want, but after a 3 days period of time, when I say maybe I don't need them, I don't buy them, because it's not a really needed. I mean, I make sure that I pay my groceries, my electricity, and all this. But there are things that are just extra that I may not need them. Again, I say it's not about being torturing you, not doing anything, not having fun, but being reasonable to make sure that later you suddenly don't find yourself where a situation where you have no money. So you always look at wants, needs, and versus wants, and make sure that you make the right decision. The budget. Once you create a budget, you cover all your monthly expenses. Again, uh, it's time to put your budget in test. Try to live within your budget and your means and see how it feels. Now, let's say your budget is where you managed to save last month $300, but you find out that you hardly bought any food. Well, it's not the way to live. This is not why you have a budget. Budget's not there to torture you. But you say, maybe I will put another $100 and make sure that I have enough money to buy good food for myself. So, I'll be healthy, I feel better. And so you move $100 and you buy more food. So, it's not about torturing yourself. It's not about being very strict. It's about really gauging what are your expenses, income and expenses, and make sure that you live okay. You don't want, again, you don't really tie yourself to the fact that you know you go into hardship, because of it. So it's a moving plan, and see what your needs are. And budget, you can always change your budget. Again, it depends upon what your goals are, and you always need to change, but you always to reflect on it. And I look at my budget on a weekly basis. Once a week, I look at my budget. Some people look at it on a daily, some people look at it once a month, but it's definitely a tool that you want to take a look at and evaluate on a certain period of time, a week, every day, a week, and a month. I would encourage people to usually look once a week on a budget, spend a couple of minutes and look at the budget and see where they are and so forth. Again, we talk about assessing it and crunch the numbers and be honest with yourself. Always be honest with yourself and be realistic. Create realistic budget and be honest with yourself about your spending and your spending habit. And the biggest habit that you want to do is, again, make sure that you create a saving habit. Do not forget to have fun. Again, budgeting is not about total deprivation. And don't be afraid to change your budget. A good budget always evolving. As we talk about it, you always want to make sure that you meet your goals. Especially, it's all driven by I would say savings goal. What is your savings and how much you meet, and you want to make sure that you always meet your savings goal. So everything that we talk about derive from what's called the personal balance sheet. A personal balance sheet provides an overall snapshot of your wealth at specific date. It is a summary of all your assets at the things that you own and your liabilities, what you owe other. And your network is the asset minus liability. So asset is really what you own. So let's say I own my car. It's an asset. I have it. I own my car. Maybe you have right now you have a bike. Okay. You have your bike and this is your bike. This is your asset. This is what you have. A liability is what you owe other people. If I took if I have a balance on my credit card, it's a liability. If I have a mortgage, it's a liability. If I have an auto loan, it's a liability. Those are things that I own to a credit union or a bank, the loans that I need to pay back, those are liability. And network is how much I worth. And I'll show you example. It's very, very simple. Uh, so let's say $1,000 in your savings account. Is it asset or liability? You can key it in. What is it, asset or liability?
They said asset.
Correct. It's an asset. It's yours. You have it in your savings account. Even you have it in a credit union an account. It's a saving account. It's your money. It's your $1,000. It's an asset. Asset. What about $200 balance on your credit card? It's an asset or liability? Anyone?
Liability.
Correct. Liability, because you owe someone. You're liable for this balance, the $200 you owe someone because you use their money to purchase something. It's a liability. So personal balance sheet. So it's very, very simple. Again, it's number of columns. One column here, you talk what is your assets. And other one is what is your liability. Okay, so this is your assets and your liability. You have all the assets. So checking account, I have, let's say, $300. It's an asset, right? Savings account, I have $1,000. It's an asset. Investment account, I have $1,500. And a bicycle that I have, it's maybe worth $200, right? And a couple of years ago, I did this with my sons, and I asked them to have a bicycle, and I said, "How much is your bicycle worth?" And they say $1,000, and I say, "How $1,000? It didn't cost $1,000." I said, "No, I know I can sell it for $1,000." So I said, "Well, let's look first of all how much does bike new worth, and second, what people sell it as a use." And then I found out that people sell them for $200, $175. So be realistic about it. When you have a bicycle that you think they're worth, you emotionally attached to them, you think, oh, it's the best bicycle in the world. But realistically, if you need to sell them today, what you will get for them. And so it's not what you purchase them for, it's what you use it as use. It's what you get for them. It's $200. And so total asset is what I do is I take all this column, and then when you do the spreadsheet, it will calculate for you the sum of all of it. And it said that I have my total asset is $3,000. Now liability, let's say I have a credit card, and a credit card I have balance on 550, and also a personal loan. I took a personal loan, and the personal loan is $1,000, and I pay it monthly to the credit union. So total liability, how much money I owe, is 1550. So really, what is my? Let's see. We know who is my net worth. Remember, we talk about net worth. Can anyone tell me what is my net worth? Net worth is total asset minus total liability. What is my net worth? Anyone?
1450.
Right. It's 1450. It's the total asset less total liability. Give me my network. It's 1450. This is what I worth. I worth today 1450. I don't worth $3,000 because I owe money. If I have to pay it off, this is what left. So when I do budget, I always want to make sure. oh, I always want to make sure that this column here will grow all the time. I want to maintain this one. Now, sometimes I don't have, I don't, if I have to buy a car and it's $20,000 and I don't have $20,000, I may take a loan for put down payment, take a loan maybe for $18,000. And my liability now going to be for an auto loan, $18,000. So actually my network going to be in a minus and be, if I have 3,000 and let's say I put $1,000. Now I have, auto loan for 19,000 and I only have 2,000 here. So 19,000 minus 2,000, my net worth going to be minus $17,000. So I mean, I'm in negative. What is my net? What is my wealth? I'm in a negative wealth. As you get older, this will grow. I mean, you save more, you invest and you save. This column should grow. And this is where budget come into it. You want to make sure that you look at what are your goal? What is my savings account goal? What is my investment? Where do I put my money? And you want to make sure that this is growing all the time. You may have to get, but you will have to get mortgage. You may have to get auto loan. You will have some things in liability here, but you want to make sure this is growing. And slowly to time, you find out that this network going to be from negative will turn into positive. So this is a very important tool. So the budget and the personal balance sheet, it's very simple to do. You can look at it and you actually create one of those on your computer and even start today. Look and see, okay, what I have, what is my assets. You may have not liability because you don't have, loans yet, but you start looking, okay, how much are worth? Do I have bicycle for $200? Do I have $100 in a savings account and $200 in checking account? And say, okay, what is my net worth asset that I have today? What is my net worth? And so this is important. And then you can the big goal is to build your make more asset and have a positive net worth. So a little bit money management tips. So be a lifelong student of personal finance. Study savings and investment. Study all the time. Read about it as much as you can. The more you read about it, the more you know about it, the better you will be, because you understand how money works, what the tools that you have to really be successful. You go to school, you learn everything, many things, and then you go to your job, and suddenly you just finish school, you have your degree, and you make money, your first paycheck, and you don't know what to do with it. I meet many people that just suddenly don't know what to do. They don't have a budget. They don't have personal balance sheet. They don't know what to do with it. So now you have the tools and understanding. What are the tools? Make sure that you build on what you learned today to make sure that you're in the right position when you start making money to know what to do with it. Set smart goals. Always plan for short-term and long-term goals. It's okay to write them on a piece of paper. I have everything on one file, my goals and my budget, my budget, my personal balance sheet and income and all these on one spreadsheet, and I have my goals in another tab, and I always compare to see where am I in relationship to my goals. Create personal balance sheet, create a budget is very important. Start saving habit. Set aside money for the future now while you're young. Start a lifetime of healthy saving habits and always put yourself first. When you when you start making money, pay yourself first. When you save, when you hear people say pay yourself first, what do you mean you save? When you start a job, if they're 401k, I will say start saving as much as you can when you're young, because what really makes a difference on how much wealth you accumulate is the time period. Time as a great friend of growing wealth as long as you use it right. So make sure that you learn how to use time when you save. Be smart shopper, needs versus wants, avoid impulsive shopping. Make sure that you always calculate, okay, do I need it? Do I really need it? Do I want it? And what are decisions? It's about making good decisions when you start saving. Consult with a qualified professional on investment and other key financial matters. Again, this presentation about not about investment; it's educational purpose only. But there are investment people. There are consultant. You go to the credit union, the bank. There are people that can talk with you about it. Financial service representative, investment people. Start meeting those people. Learning about credit. You know, Understanding what is credit, how do you establish credit, what the tools, what are the different product that you have to. I mean, you want to establish credit. We talked about last week the different product, how to start establish credit. You can establish when you're 18 years old. You can establish a credit. How do I do it? What are the tools, different products that you have? I mean, you can always contact us. We can tell you what we have. You can contact your bank. They can tell you what they have. Different banks, different financial institutions have different products that help you to start your credit. You start your credit, you understand, but you want to read about it. You want to talk to people and understand. Do not sign anything that you don't understand. uh, Make sure you talk to people. Don't sign anything. A lot of people I see signing for go to a department store and signing for a credit card and do not understand what they're signing for. You have to pay it back. There's a high interest rate. So understand what you're signing for, and don't sign on the spot. If you need to spend time, take it to adult. Read the disclosure, because when you sign something, anything you sign is a contract. So don't just sign it because I know what I signed. Read this, read the contract, because there's some consequences to the contract. If you do not pay or you're late, there's some consequences. So make sure that you understand what you're signing for. Be responsible and use common sense. Okay. Um, Always think what is right. I'm saying it because there's a lot of fraud that's happening too around, and you need to make sure that you understand what is phishing, what things are fraud. I give you an example. People will call you and say, you just won the lottery in Canada, send us $2,000 and we sent you the $1,000,000. You have to think about it. Say, did I win? Did I ever uh, bought the tickets in Canada? No. So how did I win it? So those are the things you need to understand. Use common sense on things, and you can see a lot of it, a lot of scam happening around. Be responsible. Make sure that you make the right decision. Don't make it on the spot. Ask people. But more knowledge you have, the better you will do. So these are some of the things that I want to share with you today. I want to make sure that I didn't want to put too many tools, but I think those are important tools uh, to make sure that you put you in the right path for financial success. So I don't know if you have any questions so far. Any questions?
I did see some out there. One a while back was, if you pay your credit card bill all in one shot, does that drop your credit score or build it up?
So what happened? I'll give you an example. It takes time to build your credit. Okay. People take a loan, and let's say take a $10,000 loan, and after a month pay it off, it does not do anything to your credit. Okay. A credit is it's recorded how you pay through time. So just take a loan and pay it off. We saw many people that did not understand credit. I'll give you an example. We had a lot of people that come new to the country, and they heard stories. They never was, their friends told them the stories. It was not really, was not true. They didn't understand. They took a loan, and after a month pay it off, and they come back to us and say, I just paid off a loan for $10,000 and my credit is 800. And it's not, because first of all, it's not just a score. It's you don't build score when one time you pay off the loan. It's over time. What is your credit extended to you? What is your credit limit? How do you pay your monthly bills? So if you have if you do have, let's say, it's how you utilize your credit. Let's say if you have credit for 20 years, and you have a credit card. Part of it is you have your extended credit of 60,000, and you have a credit card that have 20,000 on it, or I'm sorry, you have extended credit of 30,000 and you utilize 60% of your credit, but then you decide, okay, my credit card is 20% of 20,000 and you pay it off, then it may increase your credit because you actually show that you pay it off. But if this new credit card that you have and you just pay it off, it will not show any improvement. It's to what the factor in credit is the time, how you pay your bills 2 times, and what is your length in the credit bureau. It's not one time you pay and you have a good credit. No, it doesn't work this way. So I give you an example. We have a product called Credit Starter. When we do secure loan for 18 years old, and it's build credit to the long term. It's not that you take the loan, you pay it off next month, and you have credit. People think it's when you pay it off. Let's say you have $500, a secured loan, and you pay off the loan the next month. It did not build your credit, because what happened is the credit bureau, what they will do, they will have one payment for you, and that's it. But if you take it for the 2 years that the loan is, and you every time you pay it off, I think the payment is $20 per month, and it's paid every month. Now the credit bureau has a record about you that you pay this loan every month for 24 months or so, and then they have a credit, mean that you have a credit history. So this is what it is. I hope they answer the question. Any other questions?
There was, do you need to have a job to have a credit card?
Yes, because you have to have show the ability you have to pay. Now, sometimes what happens is, let's say you're 18 and you do not have a job. Most of financial institution, because you have to show that you have the ability to pay back a loan, and no financial institution will give you a loan if you don't have the ability to pay it back. It just uh, no one will do it. So sometimes you have the credit union on the bank will ask for a cosigner, someone that already has credit that will cosign for you to in order to issue a credit card. Yeah, because you have no, if you're 18, you don't have any credit history. So you have to build very, very slowly, different program, different product, but usually you have to show the ability to pay back. Yeah.
Any other questions out there?
And if you have any question, again, you can contact us. Rachel has a number. You can go to any of our branches. We have branches that say in Bowers, of Bowers, um, by Central Express and Bowers, very close there, and their financial representative that can answer a lot of your questions, and I can answer. And the library is a great resource. uh, a couple of years ago, I went to the library and I counted there were over 300 books on personal finance in the library. So there are a lot of information out there. There are a lot of great information on the internet. I want to make sure, I mean, it's a credible, a financial source is not someone on Instagram that is 18 years old and driving 2 Lamborghinis and have a house of $3 million and say that they can do it in 2 months. This is not a credible resource. So Wall Street Journal, Kimpliger, you go to your financial institution, make sure that you talk with people that are professionals and they can help you and set up a realistic expectation and learn as much as you can. And good luck to you. And you already took, so I applaud you because you already took by attending this session today, you already took the first step of improving your going the right step to your financial future. So thank you very much. And again, I applaud you for joining us today.
Yeah, you guys are awesome for coming. And it seems like maybe even a class attended. So we had a great attendance today. And if you did miss the first two sessions, I'm going to stick it back in here for the chat, and then stick around and do the survey. And we can put you in the drawing for that Amazon card. Thank you so much,
Yeah, thank
Ron
you.
and Elena, and we will see you soon. Take care.
Thank you very much. Thank you. Bye-bye.